Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options. And would you believe it's already September 20th, 2018? Well, my goodness, this month has really gone fast, hasn't it? And we have been in quite an interesting market indeed. After the tariffs were announced, the market has just raced higher. And so in the last 2 days, the Dow itself has gained more than 320 points, and we are only 1% away from a new record high in the Dow. Who would have guessed? But we're looking really, really good here. And this morning, the futures are pointing to a gap up open. So we will open this morning very, very close to that new record high in the Dow, as those bulls just refuse to back away. Now, one thing that's kind of interesting is we have fewer and fewer stocks leading the market higher or lifting the market than we have been. We're consistently seeing fewer and fewer stocks participate on this move up. So we want to be a little bit careful with this. We don't want to be blindly chasing. And one thing I would suggest is, if you're not already in this move, oh, for goodness sakes, don't jump into that and chase into this now as we approach that new record high. Remember, we have a weekend coming, and it would not be at all out of question to see profit takers to begin once we push on through those new high levels. Also keep in mind, next week begins the FOMC meeting, where it's largely expected we will see a new interest rate hike. So think about that as well as you plan your risk forward into this weekend. Let's take a look at the SPY. SPY also showing bullish this morning, and likely going to open at a new record high at the open this morning, with all that bullishness pushing to the upside. So we'll see that SPY set that new all-time record high. Again, be careful not to chase that gap open, just in case we happen to catch that sellers coming in right after the open and get that pop and drop type price action. We want to be careful of that. The Qs, which have been a little bit questionable, no doubt about it, showing that lower high up here, and potentially showing a drift down that would actually set this downtrend in play. They rallied up yesterday, just hugging that resistance line. Now with this morning's bullishness, we're gapping up over that. But please keep in mind that we're still in the danger zone here on the Nasdaq. If sellers happen to take over, that would be critical. So it's going to be really important that we hold above this key level of support. If we can get above there and hold, or even break above these highs here, then we would be in much better shape. So what we've got honestly right here right now is what's called a price wedge, and that price wedge can resolve itself either upside or downside. And it looks like this morning we're going to pop to the upside of that. But remember, support is not support until it's been tested. So just breaking back through doesn't necessarily mean, launch all in, expecting the Qs to just break new records. It's fairly common for that pullback to occur, or that rest consolidation across that new level of support. And then we might see those buyers step in. So watch that close. Also, let's take a look at IWM. Now, IWM just wasn't acting very well yesterday. It started up and then just couldn't get going. And IWM did eventually give up that key levels of support, and now we're seeing some price action that would suggest a little bit of weakness here. There's that lower high, there's that downtrend in play, and you can see a push lower here could bring us right back down to this trend. So nothing really wrong here. I wouldn't be I wouldn't be suggesting that IWM is in dire straits, but there are some concerns here to pay attention to. Keep in mind that it looks like even with the gap up open, IWM looks like it's going to open just below that key resistance level, so keep that in mind. Let's take a look at the VIX. It's interesting that the VIX yesterday, after such bullishness, pushed right back down here to this trend or to the support level, held right there at that support level, didn't decide to dip on through. So we're in really good shape when it comes to fear. There seems to be very little fear. Now, as we approach new all-time highs with very, very low fear, one has to consider the idea of complacency. Complacency is when the market just kind of thinks, well, it's impossible for the market to go down. It's just only going to go up. And traders become complacent. And that's a dangerous place to be. So I don't know if we're reaching a complacency point. I'm not trying to predict that. But we also want to be a little bit careful here as fear really drops out of this market. I suspect fear will drop below this support level today. And we'll see that move down. And remember, anytime fear drops to extreme low levels, we can sometimes expect that profit taking to come in and a push back higher. So we'll want to watch that closely. If we take a look at T21, 22, that 4-week new high, new low ratio, you'll see here it's really very interesting that we've had such a strong rally. But I want you to notice this right here is that we have actually dipped in T21.22. Now, what that is a sign of the fact that there are fewer and fewer stocks pushing the market higher or carrying the market higher. We're actually seeing more stocks drop below their new 4-week their 4-week high-low ratio. I mean, their 4-week averages. And we're actually seeing more stocks dipping than we are rising. And so we're getting this market moving up with fewer and fewer stocks pushing them up. That might be a clue to be a little bit careful here. But what T21.22 is really showing us is that we have plenty of room yet for downside. And obviously plenty of room for the upside here on this. But there is a clue there in the fact that fewer and fewer stocks are moving us. One of the members brought up yesterday, there's an indicator, it's called T21.08. T21.08 is percent of stocks above their 40-day. And as you can see, that is in decline here. So what's happening is fewer and fewer stocks are carrying the market higher, and that would be a little bit of a clue to be careful and not chase into this move higher. So watch that carefully and closely. I certainly don't want to predict or suggest that we're nearing the end of this market run, just that there are concerns here and a reason to be a little bit cautious and to be careful not to chase those stocks just racing up there as they try so hard to break these new records. So with that, everyone, let's take a look at the economic calendar. Our economic calendar here, I need to go back. I moved that forward. Our economic calendar here on Thursday, we have jobless claims this morning at 8:30. Those are expected to remain strong. The Philly Fed Business Survey is expected to reaccelerate here today, actually showing some good signs moving back up. Existing home sales, which have been weak, actually a little bit disappointing. Existing home sales are expected to tick up a little bit today. So nothing in the news that is likely going to be a major hindrance for us to push up toward those new records today. Leading indicators are also at 10, and then we have the EA natural gas report at 10:30. It's marked here as a potential market moving event. I can't remember the last time the natural gas report actually moved the market very much at all, or if at all. And then we have a whole bunch of bond things going on today. We have the Fed balance sheet and money supply wrapping us up here at 4:30 today. So quite a little bit on that calendar. But the reason I had this popped over here for next week, I want you to notice that next week is the FOMC meeting, FOMC forecast, and the FOMC conference. And so all of that starts next Tuesday, and next Wednesday we get those announcements. So it's largely expected that we're going to see interest rate increases. So I just think it's wise to pay attention to that, to plan for the market to get a little bit soft or funky maybe next week. So think about that, and remember, as we're rallying like this really, really strong, we have a big news week coming up. Think about taking some profits, reducing that risk as we head into the weekend. It's always nice going into the weekend with profits in the bank and being a little bit more comfortable heading into that long weekend. So let's watch that closely. Now, let's take a look on the earnings calendar. We have 11 companies reporting earnings today, with this morning probably the most notable, DRI reporting this morning. Looks like they are gapping up. Looks like they've already reported. Gapping up, looking good. DRI, Darden Restaurants, and THO would be the next most notable, and you can see it looks like they have reported poorly and are gapping down this morning. So not so much love there for THO. After the bell, MU, likely the most notable, will be reporting after the bell today. So keep an eye on those stocks as we watch for those earnings reports. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really, really do appreciate that. Also, guys, always feel free to share this video with any friends, family. Post it to your Facebook page, whatever you feel, if you think it would be helpful to those folks. Everyone, I want to wish you all a fantastic day and wish you great profits. If there is anything I can ever do to help you with your success, please don't hesitate to drop that comment. I'd be happy to help as much as I possibly can. Everyone, take care. We'll talk to you all bright and early Friday morning. Have a good one.